everyone, welcome to this free presentation session. So in terms of fundamentals today, if you check the Forex factory calendar or any economical calendar, you will see that there is no important news released today, or at least this is my interpretation of the news. I'm familiar with the news for many years, and there are a lot of news which do not have a real impact in the market, even when they are released with a big deviation. And so for today, I don't see, at least during the time we will be together 2 or 3 hours, I don't see significant news. And so the market will not be necessarily driven by these minor news. So what we have to expect is simply a continuation of the underlying movement, and probably some range conditions. But this doesn't matter. Whatever the market will do, we will have either opportunities or not. And when we will have opportunities, we will simply apply the rules in order to conduct the corresponding trades, whatever the result will be. If we have nice movement, the result will be nice. If we don't have movement, the result can be a small profit, it can be break even, it can be a small loss. But I will give more explanations during this presentation today about the kind of performances the MAX can obtain. I no longer see the prices moving on my platform. I hope it is not. Okay, no, the price moves again, and the bar will close in a few seconds. Wow, the price is moving too fast here. But still not a long bar here. Not exactly a long bar. So let's enlarge quickly. Now this is not a long bar, and it is a valid setup bar, and so we will have an entry setup. I will set the stop loss later. So if I take 2 pips here, 38.7, so somewhere here. So the price hit that level here, so I would make my entry on this level if the price hits my blue line. Okay. It is touching it, my entry would be here, okay? And my stop loss would be, it is the USDN, I have a spread of 2. Yeah, my stop loss would be right here with a stop loss size of around, so let's say 19 and 22 pips. So here is an ESL of 22 pips. Okay, I can take off that horizontal line. So now I'm consider I am in a short trade with the USDN. And so once I am in a trade, I have to handle the trade, whatever the result will be. Okay? And so the result can be a profit, it can be a break even, it can be a loss, depending what the price will do. On the euro-US dollar, the price is still in a concession zone mode. There is no reason for the moment to adjust the... Yeah, we can adjust the resistance level. Let me check. So I was here, and so I can now adjust it, yes, here. And so we have to wait for its breakout. And of course, while I'm handling a situation in a specific pair, I can miss possibly another opportunity. Here, for example, on the pound US dollar, this candle was an entry setup bar, okay, with an entry where the blue line was. So there was a possibility to make an entry here at this level. So sometimes if you are busy with another situation, you can miss an opportunity. And And if you miss an opportunity, you simply wait for the next entry setup. Now for the USD yen, because the trade is open and it is opened as a safe and perfect mode, the setup is called a safe and perfect mode. And why it is called a safe and perfect mode? The safe and perfect mode is one of the most reliable setup. This does not mean that we have a 100% winning rate with that setup. Far from that, okay? The average winning rate is around 75%. But it is called a safe and perfect mode because it is one of the footprint of the big boys in the market. And I explain why in the course, even in the Max Primer course. But we have never a guarantee that the trade will end with a profit. But once the trade is made, now what we have to focus on is on the exit conditions and the scaling conditions. We are not facing any fundamental critical event. And so if we see the trend unfolding, and if the conditions to make a scaling is appropriate, then we can make a scaling. Oops, sorry. I wanted to adjust my chart with another on my second screen to have a little more detail on my chart I do not show here. And so now for the exit technique. So we have a series of exit technique to make our MX or our XXX. Not on the pound yen, but on the USD yen. Sorry, USD yen. Where is the USD yen? It is here. So we have several types of exit techniques. So we have around 20 exit techniques to handle our exits. Our exits are always meant to be risky situations. Let's take an example to explain what I mean by risky situations. You can see that we are using an indicator, an oscillator, which is called here the stochastic of the RSI. Typically, when the price is in a down movement, okay, in a down movement, and the stoch RSI makes a bottom, then many traders will consider they will have an exit condition. This is the classical exit setup with momentum oscillators. We do not systematically make an exit when the stoch RSI makes a bottom. If the opportunity will happen, I will show you how I make my exits. Because it depends. Sometimes the exit is not valid, and sometimes the exit would be valid. If the exit is not valid, we don't make the exit. What I can already say here is I will make an exit only if the price moves at least 10 pips, or if I can make at least a 10 pip profit on the first unit I will close. This is one of the conditions for my first MX, and I can predefine that in advance. If I am not able to close one unit with at least a 10 pips profit, I will not consider my exit condition. Now, when we have our students starting with the max, when they see a valid exit, I advise them to make them, whatever the result of the units. The result can be a nice profit, it can be a small profit, it can be break even, it can be a small loss, never a big loss, by the way. Just to learn to apply the rules in a complete mechanical way. Then when they know the rule in a mechanical way, and we will see in this case if this blue candle closes as a blue candle, we will most probably have an exit rule triggering. I will explain how we teach them to make the exit, and then I will teach another a nuance We call that a nuance, a discretionary situation. In fact, we can use with more practice. And I like to use discretionary situations, but a discretionary situation is not a subjective situation. We have extremely precise definitions of what we consider as discretionary situations. And a discretionary situation is, for example, the possibility to avoid an MX, so to avoid to close a trade, or to close one unit, or to close simply the trade. A discretionary situation may be to adjust the stop loss in a different way than our general rules. A discretionary situation may be to add to a trade in a very specific way. And the thinking process behind each discretionary situation is simply the context of the trade risk management. If the application of or the implementation of the discretionary decision does not add to the risk, or does not add too much to the risk, and this can be also defined in a very formal way, then the discretionary decision can be implemented. And you see, this is a typical situation we face always and always. A valid entry setup appears, a valid entry appears, we open the trade, and then almost immediately the price goes against the trade. And this is where many traders will fear, or will feel a lot of fear, and will scratch the trade in order to make a loss as small as possible. But when we have a 75% winning average, and considering that these pullbacks are normal, considering that the risk on the stop loss is very small, for example 1%, why to panic when the price is making a pullback? Okay, this candle has closed as a blue bar here, okay? And I like to change the color for my vertical line here. The store RSI gives me here an exit conditions. We have even two exit conditions appearing with this store RSI. And so normally this blue bar is an exit setup bar. When we have an exit setup bar, we apply a risk tolerance for the exit. I have specified that I would use a 3 pips tolerance. So here we are at 40. How the numbers are becoming smaller and smaller on the platform, 42.9, and so my exit should be normally at 459. So here, when the price follows through. Now with the USDN, the price, the pair is less volatile. I can take a 2 pips risk tolerance. So I will take here at 451. Here. If the price hit that level, we advise to our student to make the MX, acting a small loss, okay? 6 pips plus the spread, 8 pips loss on that unit. Now with more practice, we can say, okay, this is a discretionary situations when I can decide to skip that small loss, wait for the price to possibly unfold the trend, and make the MX when the profit will be large enough. And this is what I do. Indeed, why? Since I'm trading live with the max, I have now several thousands trade, around 4,000 trades. And recently I have made a deep study about the first MX of all my trades. In the past, I was used to make the first MX systematically should the price follow through and hit my exit price level. And then I have considered what would be my result if I skip the first MX and make the first MX only if the profit is large enough. And so I had to define what was a profit large enough. And so I have defined that, and in this case, in this specific situation, it will be at least 10 pips, so this means 10 pips or better. And then I have applied that rule to all my trades, more than 4,000 trades. It has been a huge work. And then, but at the end, I have realized that the the global profit would have been larger. Of course, in the case of a losing trade, the loss would have been a little larger too, but the global profit, the profitability would have been better. And so this is what I do now personally in my trade, except in one situation when the price is in a choppy mode. But now I make my MX, my first MX, only if the profit is large enough. Yeah, have a safe fight. Now the advantage, which is essentially a psychological advantage of making systematically the first MX is the following. Let's suppose the first MX is made here on the exit price level. So I have said the loss would have been 6 pips plus the spread, so 8 pips. So let's make a small calculation, a small risk calculation. So minus 8 pips for the first unit. And let's suppose the price continue to go against the trade. Somewhere in this area, we call the movement invalidation area, the second unit must be closed if the price continues to pull back. So let's suppose we close the trade on the highest level of the invalidation zone line, on the invalidation area here. The loss would be 10 pips plus the spread, 12 pips, okay? 12 pips. Minus 12 pips. This means that on the 2 units, the loss would be, and of course in the course we go way in more details on these aspects, the loss would be, in the worst case scenario, minus 20 pips, okay? Minus 20 pips. Oh, sorry, minus 20. Not 30, but 20. These 20 pips loss would represent, because the stop loss is 22 pips, a negative rework to risk ratio, of course, of how much? In order to have the average size of the trade, we have to divide these 20 pips by 2, so 10 pips, and then we divide it by the size of the stop loss, 22 pips. And so we get a rework to risk ratio, a negative one, of minus 0.45 R. R representing the risk. Okay? The first remark we can make is that result, that loss is less than the full loss on the stop loss. More than half. Indeed, if we have taken a risk of, let's say, 1% on that trade, then the loss would be less than 0.5%. If the risk would be 2%, the loss would be less than 1%. So a small loss. And this will be always the case when we make systematically our first MX with a loss, and then we are forced to close, to scratch the trade because the movement is invalidated. So we are always guaranteed to make a small loss. Now, should I close my 2 units in this area, in the movement invalidation area, my loss would be here 2 times 12 pips. So 2 times 12 pips, so minus 24 pips. These 24 pips represent a reward to risk ratio a little larger than half R. So 0.55. 0.55. So minus 0.55 R. Another question is that negative reward to risk ratio, minus 0.55 R, significantly larger than this one, minus 0.545 R? No, they are pretty much similar. So the difference is a small one, and even this one, minus 0.55 R, is still a small loss compared to the full loss. And so this is why I can sustain such a deeper pullback until the movement invalidation by skipping the MX when my exit rule trigger. Okay? So you see the kind of risk aspect we are systematically doing when we are handling a trade in order to evaluate if a discretionary situation is acceptable or not. Of course, we go way more into the details in the course. This is just a raw approach to what we are doing. Let's have a quick look to the other pairs here. Wow, a nice reversal in the pound, a breakout here in the euro kiwi. I don't like to trade the euro kiwi because the spread is reasonable here. Okay, it's reasonable. So on the euro kiwi, should have I been attentive, the entry setup would have been this one, just to illustrate. And the entry would have been somewhere in this area, somewhere here. Okay. The stop loss would have been somewhere, yeah, here. And it would have been around 25 pips. And one of the important rules I have when I have open trades is I never handle more than 2 trades simultaneously in the 5-minute time frame, because it requires a lot of concentration. Of course, I can check what other pairs are doing, but if I see an opportunity in another pair, I will not take that opportunity. 2 trades are enough to handle simultaneously. So let's see how these 2 situations will evolve. For the moment, we have had the breakout with that red candle, but the breakout is not yet a real breakout. You can see that that candle is still touching the support level of the concession zone. So it's not a real breakout. Now, a possibility we have when we have such a breakout is the price can make some movement and then comes back, pull back, and revisit what becomes now a resistance level. And when I have some time, I can adjust on the chart, but with the MTM makes that automatically for me. It does not give the precise name of the setups, but here I can write the precise name of the setup, which is a REMO, or to be even more accurate, it is a breakout REMO. Why? Basically because the price comes from the MO line, the momentum line, which is our gold moving average. There are other conditions, and because the price has broken the support level here. Now this is an interesting situation because we are in 2 pairs which are not usually well correlated. So it may happen that one moves nicely in our favor and the other makes nothing or makes a losing trade. And this is the advantage of making several trades simultaneously. You may still end with a profit even in the case one of the trade fails. So on the risk aspect, what is important also to consider is the global risk. The MTM, our max trade manager, gives that aspect too. When 2 trades are opened, it not only gives you the risk on each trade, but also the global risk. And if you take a 1% risk per trade, you will have a 2% global risk. A 2% global risk. Okay? Of course, while you will be handling your trade, as soon as you will have been able to reduce the risk significantly on one of the trade, you will free some risk. And so perhaps if you are able to handle 3 trades simultaneously, you will have an opportunity to open a 3rd trade. Personally, myself, I don't do that because I trade with the max sum, and the max sum requires much more concentration, and so 2 trades are enough. So would you would you even consider hedging at some points in time? No, I don't hedge. No. Hedging is never a necessary technique. In this case, my first MX for the Euro Kiwi will be minimum 14 pips, a net profit of 14 pips on the first exit. There is coming CB into me. What is CB, Wolfgang? What do you mean by CB? Oh, the consumer confidence. Oh, yeah, but it is the CB, consumer confidence. I don't attach importance to it. I find that there is a lot of, I may be wrong, because sometimes the big boys attach importance to news which usually are not important at all. The preliminary University of Michigan consumer sentiment is way more important. And there is a misunderstanding with the news among many professional traders, even specialists of fundamental analysis. Not all the news are important. And there are news which are always important. There are news which are important only in some special situations of the economical cycle of the corresponding country. And there are news which are never important at all. And there are news which are sometimes fashion, a fashion by the big boys, because they have nothing else to analyze. And so, but a fashion news never lasts too long, okay? And of course, such a news can create some volatility. We are seeing some volatility, but the impact should not be a big impact, okay? Now, when the price moves significantly in favor of the trade, one of the processes to reduce the risk is to adjust the stop loss. And we have rules to adjust the stop loss. We have some rules to adjust the stop loss. So this red bar is a long bar, 15 pips. 15 pips, I will consider an MX in this area if the price retraces enough. Yeah, just in that area. And so the price has failed by 1 or 2 pips to reach that area. This becomes also a red bar, a long bar itself, but it's too early to consider where the low will be. We still have, 3.5 minutes. Yeah, Alex, long bar, partial exit if the price retraces enough. And it's up to you to define the proportion of the retracement. I like to take 1/3 of the length of the bar. Now, it is sometimes, it may be stressful to wait for the bar to close or to approach the close of the bar before deciding that we have a long bar. We will have, obviously, a long bar. And the potential stress such kind of situation generates is before we have the close of the bar, the price can still retrace somewhat and even a lot. And so, but I have my discipline. I have my patience. For a long bar, in order to define where to make my exit, I always wait the last minute of the long bar. And the price of that is to miss a good MX. Okay, but anyway, I have missed the MX here because the price has not followed through enough. I'm pretty sure I will make a good profit on the first unit I will close at some moment. Okay. It will be almost the time to consider when the price will make the low of the candle. Waiting for the last minute is sometimes not enough, but there is no specific rule for that. Personally, I wait for the last minute in around 20 seconds. And so if this is the low of the bar, for which we have no guarantee until the bar closes, so the bar would be 22 pips long, 1/3 of that will be around 7 pips. And so 7 pips will be around that area. Yeah, 7, 8 pips. Okay, I make my MX now here. And so I close one unit here, okay? And with the MTM it would be very easy. We push on the MX button. And so the profit on that unit would have been here. So 30 pips minus the spread. The spread is, let's say 5 pips to consider a small slippage. So 25 pips, okay? Plus 25. We are not, I'm simply marking the chart. So I don't know which kind of slippage I would have had, okay? And I further adjust my stop loss that way. Now you can see that with the adjusted stop loss, we have still a remaining risk on the second unit, and the risk is only here, let's say 5 pips plus the spread. Let's consider 4 pips spread, so 9 pips. The loss can be 9 pips on the second unit. And because we have already banked 25 pips of profit, we are in a risk-free situation here. And with the max standard level, if the price makes some pullback, we may have possibly an opportunity to make a scaling. I hope I will be able to show you such kind of possibility here in this trade example. And we can see that the USD on the contrary is still making nothing. And this is a situation which happens sometimes. A long bar may be itself followed by another long bar. This sometimes happens, but sooner or later, such a steep angled movement, the price is really dropping like a knife. Because there are long bars, the price will make a pullback. Now, when we wait for the long bar to close, or when we are very close to the close of the long bar, if the price has not retraced too much, so we can define a nice exit level, and either the price will hit or not that level, but sometimes the price retraces too much, too fast, before we can pinpoint the low of the bar, in which case we miss the MX, which is not a big concern because if the price follows through, if the price resumes the movement, we are still in the trade. So Alex asks, if the price is going to go down in the same way when you will take the second MX. Okay, so here we are left with one open unit, okay? We have two possibilities. We have, in fact, three possibilities here. If the price gives us an opportunity to make a pullback and a scale-in before we have an exit condition, so we can make a scale-in. Now, the second possibility is, before giving a scale-in, the price will make a bottom, and the price will generate an exit signal, an exit setup. Because we are left with one open unit, we can close that second unit and close the trade, take the profit, and look for another opportunity. So this is the first possibility. The second possibility to close the trade, so to close the second unit, with the possibility to keep open the possibility to make scale-ins, is instead of making the XXX on the next exit setup, I can keep the second unit running, okay, skipping the next exit setup. Why? Because we are in a risk-free situation and I can continue to further adjust my stop loss that way. My second unit is virtually break-even. So if the price makes a pullback, I don't care. I am in a profitable trade. So I can wait for the price to pull back and wait and see if the price comes back, giving me a scaling opportunity. Because if we have the scaling opportunity, that scaling, if we are in the context of a true trend, this scaling will give me much more profit. But of course, the choice is on the next exit setup, we make the exit. Okay? And so the alternative to make the last XXX when we are left with one open unit is to wait for the price to invalidate the movement. So this is the very last way to make the XXX, is to keep that open unit as a runner without scaling and waiting for the movement to invalidate. But in this case, what do we see? We see that the price is really making a steep angle. The price cannot sustain a long time such a steep angle. It will necessarily make a pullback, and usually it will be a deep pullback. The movement invalidation will come in this area. Why leave all these pips on the table? Why leave all these pips on the table? When the price is making such a steep angle, on the next exit condition, usually I make my exit. Okay? The steep angle is one of the guidelines we have to make our XXX. Why? Let me explain something here. I need for that to enlarge a little more the chart. Very often when the price is making such a movement, we can draw a support level that way. I will not try to be extremely accurate, okay? And a resistance level, which can be parallel in general. Okay, we don't need to be absolutely accurate in the way to draw these lines. The slope of that channel is sustainable for the trend, for the price. So that trend can last several hours. Now, inside that channel, the price is making steep angled movement. Okay? This one. Oops. This one. These steep angled movement inside a longer term trend, in fact, can never last a long time period. There will be necessarily a pullback, and usually the pullback will be deep enough to reach that area or the other side of the channel before resuming the downtrend. But because the depth of the channel is important, This is why when we have such a steep angle, we advise that when we have the exit rule triggering, and I show you the story exercise, but we have other exit rule, of course, for example, with the price action itself, it is advised to make the XXX and then wait for the next opportunity. Okay? This is clear? Let me clean somewhat that chart. And we can see that, in fact, a trend can be sustainable on the medium term, but not necessarily sustainable on the short term. A very steep angle is never sustainable on a short term. You can recognize here that we have one of our exit rule triggering defined with the price action itself, but because my profit is not large enough, I have said that it should have been around, I don't remember exactly, 10 pips net profit. As long as I'm not in that context, I will not make that exit. Of course, if the price reaches here the area for the movement invalidation, then I will make my MX, of course. This blue candle can possibly be an exit setup bar. We have to wait for the candle to close. Yes, but this is a warning technique, Alex, okay? The 358 is a warning technique. And you can see that it is applicable here. So it is a warning telling us that an exit setup bar will come sooner or later, okay? Now, depending on how that blue bar will close, we will have or not an exit setup bar. So we have to wait how much time? Now, let me check carefully. Yes, we have this bar is an exit setup bar, and so I will define my exit level here, 2 pips above, so at 3 pips above at 454. 454, so here. So if the price hit that level, I will make my XXX. Okay, the price is hitting that level. Okay, now, so here I have my XXX. Okay? And so, the trade is closed. The trade has not given us the opportunity to make a scale-in. The price is moving too fast. That happens very frequently. 30% of our max trade have no scale-ins. Okay? Around 25% of our max trade have at least one scale-in. And around 50% of the trade have 2 or 3 scale-ins. And so here, so the trade has been closed. The profit on the second unit is around 25 pips too. So let's say 24 pips. The spread was, let's say 4 pips. 29 minus 25. Yes, also 25 pips. So plus 25. Not 35, but 25. I have 2 big fingers, and sometimes when I type on my keyboard, I push on the wrong key. So here we have some time, so we can annotate the chart. The trade has made, it would be easy to calculate the reward to risk ratio because the stop loss was 25 pips. So the trade number 1, because we may have several trades, has made plus 50 pips. The stop loss was 25 pips, so the reward to risk ratio is really easy to calculate. It's exactly plus 1.00 R, 1 R. And unfortunately, the fact that the price was so fast has not given us any opportunity to make a scale-in. We may have possibly the price resuming the down movement, but we need to have a pullback deep enough before considering any other useful or worthwhile opportunity to trade on this pair. Okay? And while we are waiting for that opportunity, of course we can miss a nice continuation of the movement, but I apply the rules, okay? I am in the context when the price tells me that it is a good place to make an XXX, so I don't hesitate, I make my XXX. In the meantime, while we are waiting for that setup, we can, of course, check other charts, because we may have possibly opportunities on other pairs. So I don't see nothing special for the moment on the other pair, so we have still to handle here the USD yen pair and trade. So I'm really sorry for our guys, our friends in the Chatsi area. I don't have time to watch the Chatsi. I'm sorry for that. But after that, when I will consider to stop here, I will have a look to the Chatsi. Yeah, the Chatsi is a private chat area for our Max graduates. Now you can see an effect of deciding a risk tolerance level for our entries or our exit. And we have not to complain for that. Should have I taken a risk tolerance exit just a little bit larger, 4 pips instead of 3 pips, my second unit would still have been opened, okay? But this is the price to pay when we have strict rules, and our rules are based on experiences made on years and years and years. Personally, I have checked all our tools, indicators, patterns, concept, rules, on a period of around 20 years, until the beginning of the 90s, in many pairs, in almost all the time frames. And so I have never seen a circumstance when, for example, the settings of our indicator had to be changed. I have never seen an example when our tolerances should be changed. And so, of course, sometimes we make a too early exit, but sometimes we get the entire trend. And sorry, if we miss some movement, we miss some movement. We have made a trade. That trade has been a good trade. We still have one opened, and so we have made our day. Okay? Thanks, Oscar. But you will be amazed to see how many times a too steep angle, when the price is falling almost vertically, when you have an exit conditions, usually it's the optimal place to exit. Almost always. But almost always, don't get me wrong, doesn't mean always, okay? Now, in the meantime, we are observing another interesting phenomenon in the USD yen. Many professional traders or many traders are complaining that using technical indicators is useless because they are lagging. And that's true, they are lagging. But is a lagging indicator really a handicap? On our chart, I have shown to you where, what I consider the area for the movement invalidation we are trading. And that area is all that area. Let me take something. In that area here, I tried to define how to draw it as useful. In that area, okay? And that area moves downward because we are in a downtrend. Now, we are using moving averages. We know that the moving averages are lagging. Our more line has a setting of 21 period. This is very, very classical. So its lag is around half of 21, so 10 bars usually. And we add also a shift to the bar. We can see that if we draw a vertical line on the Bruton bar, the moving average has a shift to the right. the shift is 3. So we add to the lag. So not only we are using lagging moving averages, but we still add to the lag. But we don't care for that. What is important here for the moving average is the inertia. You can see that even if the price is doing nothing here, the price is ranging and the range is clear. We have a nice range here in that area. Okay? The price is clearly ranging. We have a resistance level, we have a support level, but in the meantime, the moving average is going downward. The price is doing nothing, and the moving average is going downward. This is the inertia all moving averages have, and that inertia helps us to minimize the loss should this trade be closed with the loss. Let's make another risk analysis situation now. Let's suppose I have to close my 2 units, let's say at the extreme of the movement invalidation here, in this area. My loss would be, let's say, 7 pips plus the spread. The spread is, let's say, 3 pips. 7 and 3, 10 pips. 10 pips per units. So now instead of having 24 pips loss, I will have only maximum 20 pips loss. So minus 20 pips. And these 20 pips loss will represent a negative rework to risk ratio, of course, of minus 0. How much? 45 R. So a little less than the maximum minus 0.55 R here. And so progressively, even with the price doing nothing, my maximum loss will decrease progressively. Okay? Making me feeling much more comfortable in that situation. I don't care if the price does nothing here for the moment. I will stay when either I will close the trade with my exit rules or with the movement invalidation. I know that the loss in the worst case scenario will be small, and even smaller than that number here. Okay? And this is what we train our students to focus on, the risk aspect of the trade. We never mind for the profit the trade can make, but we focus on the risk we take on the trade and on the way to reduce that risk. When we pay attention to the risk first, we will be always guaranteed to have a small loss in the case of a losing trade. But when we will be in a winning trade, the winning trade usually will be way larger than the loss. With the max standard, this is the average size of a losing trade, around 0, -4, 0, -5 R. The profit is around 2 or 3 Rs, so way larger than the loss. And we have a winning rate of around 75%. Even if we take a 70% winning rate, let's make some calculation of the expectancy. Let's say we have a 70% winning rate, okay, with a rework to risk ratio of +2R. And let's suppose, no, I have miswritten, delete. So I have said, let's say, a 70% winning rate with an average rework to risk ratio of +2R. Okay? Now we don't have 30% losing trade. We have around 15%, 20% losing trade. The remaining trade are break-even trade. So let's take an unfavorable situation with 20% losing trade. And let's consider that a losing trade gives minus 0.5 R. That way, okay? So what is our expectancy? It is +2 times 70% minus half times 20%. So this means we have an expectation of 1.3. So our expectation, so the average result per trade is plus 1.3R. Okay? This means that on average per trade, if we are used to make a 2R result on a winning trade and minus 0.5R on a losing trade, on average, on a large sample of trade, we will see an average result per trade of 1.3R. This means that on 100 trades, we will make approximately a profit of 130 Rs. Okay? What will be important when you have enough trade is to calculate your expectancy. It must be a positive number. It must be a positive number. If you have a positive number, then you have a winning system. Okay? Justin says, I have to actually work for a while, so I need to leave. Thanks for the presentation. Oh, okay, see you in the morning for the ETF. Okay, Justin, have a great day. Nice to have seen you in the room today. And you see, with patience, the price seems now to move in our favor on the USD yen too, making our invalidation area even lower. Okay? We cannot consider that red bar as a long bar when we compare its length with the length of these bars here. The price has to move further downward to define it as a long bar, so no decision here. What we can do, of course, is to adjust the stop loss, and the stop loss will come here, reducing the risk on that trade. Now, in the very worst case scenario, should we have, for example, an internet connection problem and the price fast reversing, the loss would be here, of course, on the stop loss, 12 pips, almost half of our initial stop loss. And when we see what the price is doing, we can even tighten further our stop loss, making here a certainty that in the worst case scenario, the maximum loss will correspond approximately to the maximum loss I have calculated here. But we are even in a better situation now because our invalidation zone area comes lower and lower. We are progressively approaching the break-even area. And so the key to be successful with the max is indeed discipline and patience and confidence. Confidence in the market. Confidence in the market, you need to be confident that the market will provide you with opportunities. And if you indeed scroll your chart, you will see that the market almost every day gives you nice opportunity. Of course, there will be days which will be way more challenging. I remember some days on some pair, the euro US dollar, the pound US dollar, waiting for the entire day, the entire European session, waiting for a valid setup, which has never come. Never. And so then no trade. I don't force the trade. But I'm sure that 2 or 3 days per week, I will have a large movement. And whenever I will have the opportunity, but not necessarily with steep angle. And so as soon as I will have the opportunity to make at least 1 or 2 scale-in, the result will be a great result. And so you need to build that confidence in the market. Observe the market. Scroll through charts on all the pairs, on all the time frames, on many years. It requires some work, but it's a work, it's a time, a well-invested time for analyzing the market. Then you need to build the confidence in the max itself. And so to build the confidence in the max, first of all, you need to understand the concept and the rules. You need to apply the rule. You need to learn to apply the rules correctly. And so this requires practice, because with practice, exactly as I have shown to you here, I don't try to guess what the price will do. I can define some scenario, and in each scenario I can decide what action to take, but I don't try to guess what the price will do. Okay? And so defining scenarios is defining plans. And when the price will unfold one of the scenario, necessarily it will, I know what to do. Okay? So I apply my rules without trying to guess what the price will do. And so you will gain confidence in the max in its ability to catch nice movements. And in the course we give, especially with the scale-ins, some statistics about the opportunities we have to make scale-ins. And then confidence in yourself. If you are able to see on past chart where the decision should be, so using the hindsight, of course, you will be better armed to apply the same rules when you don't know the right side of the chart. And so the third level of confidence is to build confidence in yourself. In yourself. And one of the way is what I have tried to explain through these small exercises about the trade risk aspect. Focus on the risk, not on the profit. What's the problem if you miss that movement here, which could have doubled your result? This is not a problem. You have made a successful trade, respecting the rules, respecting your trade plan. That's good. You have made a good trade. Should that trade be closed with loss, it would be also a good trade. A losing trade, a trade never defines the quality of a trader. And you will get the result corresponding to your own quality. And so you need to build also confidence on yourself. And this comes with practice. This comes with a small risk per trade. You don't need to use a 2, a 3, a 5% risk per trade. Take a small one, 0.5%, 1%. It's well enough. Because in fact, if you know what is the expectancy of your trade, and you can do that, and the expectancy will be always a measurement of your own skills, okay? Never on a method. The expectancy of a method, when the rules are applied exactly correctly, it's the ideal you can achieve. But we are human beings, we are never perfect, and myself, I am full of default. I will never achieve the ideal expectation, but I can come as close as possible, okay? And practice and reviewing the trade help us to improve progressively in the way to handle the decision and so the trade. In order to know the financial profit you can make with the max, knowing the expectancy is not enough. What you need to know is how many trades you can do, for example, during 1 week, during 1 month. So the frequency of the trade is also important. So if you have enough trades, let's say 200 trades on 1 month, then you know that on average, on 1 month, you will have, let's say, I don't see, let's say a number like that, 100 trade, no, sorry, let's say 50 trade per month, okay, 50 trade per month. And you know that on average, you will make a 1.3 hour per trade. You multiply that expectancy by the frequency, so 50, and you will get your financial result per month. So 50 times 1.5 is 65 hours per month. So if your R is 1%, on average you can count on a 65% per month. If you have on average 50 trades per month, okay? And so you get the idea how you can project your future profits when you know the efficiency you get with one method. And this is valid for any trading system, okay? And so knowing the kind of financial performance you can get with one system, you can adjust your trading account size in order to get the revenue you want to have. Okay? And you will see that perhaps a $10,000 account will be enough. Perhaps you will need to trade with a $20,000 account, perhaps with a $50,000 account. Of course, if you need a larger trading size, trading account size, you will need several steps before achieving that trading size account. You can start with a smaller trading account and trade without making any withdrawal or small withdrawal. And you can make the necessary withdrawal when your account will achieve the level you need in order for your account to generate the revenue you want. Okay? So these are all aspects of any business plan then a trader must consider when he wants to trade professionally in order to generate revenues with his trading. Now we are approaching the moment when the price will have moved enough to generate a profit, most probably on NMX. I have said around 10 pips. It can be 9 pips, it can be 8 pips, it can be more than 10 pips, of course. We have some flexibility in that context. And with the price moving in our favor, we can continue to further tighten the stop loss. What is important in tightening the stop loss is to keep a stop loss always large enough. And you progressively reduce the risk on the trade. Now the risk is only, let's say here, 6 pips plus the spread. So 3 pips spread, even not, yes, 9 pips, so 18 pips. So you reduce further the worst case scenario should the trade be closed with a loss. On the stop loss. On the area invalidation, the loss will be even smaller. So now we are approaching the moment when we will be almost, for sure, break even. Can we check euro, US dollar? Yes, sure, Samuel. The euro US dollar is still in a concession zone mode and has still to break that resistance level. So no opportunity. Now we see a potential opportunity in the euro yen, but now we are approaching the European market close. In around 20 minutes we will have the Frankfurt close, and 1 hour later we will have the London close. So for me, starting from 10 minutes ago, I no longer open a new trade. So now we are out of time to open a new trade because we are now in the process with the big boys closing, taking profits and closing some of their position. Okay? Yeah, perhaps, Jean-François, indeed. There are always some pairs moving nicely. Okay. And we can see indeed for the Kiwi, and I have taken the Euro Kiwi, but we could have chosen the Pound Kiwi, the Aussie Kiwi, the US Kiwi, and we see that the Kiwi is very strong. So there were a lot of opportunities. Okay, but the problem was also to choose the Kiwi, and why the Kiwi? Okay. If you focus on our top 10 pairs, let me show you how you can get them. I'm going to display our website, but I want to keep an eye on the USDN. So let me quickly show. So this is our website, maxtradingsystem.com. You have here a link, a news watch list. You can click on that link, and then you will land on the page giving what we consider the important news release this week. There are some explanations on how to use them, and there is later on the page the top 10, and these are usually the best moving pairs they are the best moving pairs for the last 4 weeks, and so you can choose among them. You can add some additional ones if you want in order to have some pairs to monitor, and you have a high level of priority to choose best moving pairs. Now, this does not mean necessarily that you will get always good setups, okay? But at least you have the guarantee for these pairs usually to move nicely, and you can get these information for free. You can sign up on the page. You give your first name, your email address, and every week you will receive the updates each week for these informations. Okay? And this is a nice way to choose pairs having a large potential to move. You can see the pound kiwi, the euro kiwi were among them. Okay, let me close that. And let's come back to the USDN. Now we can see if I draw an horizontal line here, here, from the entry. Now the entry is right inside the invalidation, the movement invalidation area. So we are in the worst case scenario sure to close the trade at least at break even here. Okay? And because the price has continued to move in favor of the trade, we can further tighten the stop loss. The price has already moved here around 14 pips. So if the price gives us an exit setup bar, I will consider to make here an MX. That's think in same way when you trade on other time frame. When you trade, yes, Connie, the rules are exactly the same on any time. But let's take, for example, the daily time frame. Okay, I will stay on the 5-minute time frame on the USD yen because I want to check the situation. But let's take, for example, the euro kiwi on the daily time frame. Of course, the setup will be different. Okay, the setup will be different, and but you will have exactly the same kind of movement. And so here a nice setup to go long. We have with the Max ETF nice movement to go short, and sometimes the price can be in a complete choppy mode. And so what may be a nice trend in one time frame may be a choppy mode in another time frame. But you will have exactly the same setups. The setup definition are exactly the same. The rules are the same. The way to place the stop loss and to adjust the stop loss are the same. The way to make the MX, the scale-ins, and the XTX are exactly the same. Okay? So same chart, same template, same rules. See a nice down movement lasting several months. So 50 days. 50 days is a little more than 2 months. But a nice 1,310 pips down movement with some possibility for scaling. One possible scaling here, possibly one scaling here, possibly one scaling in this area. So several scaling. With a higher time frame, when we have a pair nicely trending, If you take, for example, the euro US dollar or the pound US dollar these last months, you would see nice downtrend. And so you can make a huge profit with less action, less decision, less effort with these higher time frames. Okay, and so very often a question which is asked is, what is the best time frame to trade? There is no such best time frame to trade. The best time frame to trade is the time frame you are comfortable with. If you are a full-time trader, you have to check among the small time frame which one best fits your own personality. Is it the 5-minute time frame? Is it the 15-minute time frame? Is it the 30-minute time frame? If you have another profession, a professional activity, a 9-to-5 job, then perhaps the best time frame will be the daily time frame. Because of course it's out of question unless if you are your own boss, it's out of question to check your charts when you are on your job. This is not good and this is not correct. And so you have to choose the time frame corresponding to your own constraints in such a way that your trading activity fits harmoniously inside all your other activities. Okay? So you need to test them, simply. Myself, I like, of course, to trade the 5-minute time frame with the max ETF level of the max, but I have also trades in the daily time frame. So we are approaching the moment when this pullback will give us an exit setup bar. Let me check something else here on the USD yen. The London Open was around this moment. We have had the top of the day here. The movement was 56 pips. So we are in the context of what we call a true trend. A true trend. When the price makes more than 50, 60 pips, depending on the pair. We have the Frankfurt close here at in a few minutes at 18:00 on the platform. My platform the midnight correspond to the US close or open. Then we have the London close here at 19. Okay, I will write here Frankfurt close. I will write here the London close. That way. Properties shows object descriptions. Okay. When we are in the context of a specific type of trends, what I call a true trend, which is explained in the course, we know with a probability certainty of 75%, then in some area here, and I give all the details in our course, and it is not the price level, it is a timing aspect, okay? We will see the exhaustion of that movement. And so when we draw that area accurately, when we have an exit setup bar, here, the exit setup bar has perhaps appeared. Let me check here. Not yet, perhaps on this candle here. We will have to wait for 2 minutes, approximately 2 minutes and a half. We are approaching the exhaustion of that movement. Usually the exhaustion comes in that area of that box, sometimes in the first part. And so we have guidelines telling us that when we see such a situation, either we can make an MX or we can make directly an XXX. And so let's see, we have to wait first of all for the candle to close. and unfortunately it will retrace too much. And we have no other rules triggering here, allowing us to exit faster. With the max standard, we may have a faster way to exit. Let me check on my max standard chart. Yeah, with the max standard chart here, where is my USDN? Let me check if it would have been possible to exit earlier. So the price is retracing very fast. Yeah, it would have been possible to make an MX at 113, I don't see exactly, 28. 113.28, so 113.28, somewhere here. So with the max advance, with the max standard, knowing that we are in that specific time window when we see the exhaustion of the movement, sorry for that. So this level here would have been an MX level. An MX level, not an XX, an MX level, because we are still in the first part of that box, and some of our max students have called it the red magic box because I'm used to draw it in red. But to draw it on the right place, on the right time, you need to know the rules of that box. Okay? So here an MX producing here a result of around, you see the 10 pips minus the spread, so 11 pips minus the spread, let's say 8 pips profit, so MX1 plus 8 pips. So the expected profit, or the minimum expected profit to make the exit here. And you can see that the movement in valuation area here is at break even now. So even with a pair not having moved a lot, a profit is still possible. Now, should that bottom being formed after the Frankfurt Open, so in this area here, I would have made an XXX, because very often when we see such a situation, very often we see the price making another attempt to resume the down movement, not always, but very often. And so I count on that possibility to make my XXX. Now, if I have to close my XXX in this area, that's not a problem. The first MX is profitable, and so I'm happy with that. And we can see that the Euro Kiwi has continued to go downwards without. Why am I taking the Euro yen? The USD yen, sorry, USD yen. What is happening with my platform? I want to see the USD yen here. Sometimes we have to fight with MetaTrader. I think I have deleted my USD yen pair. Oh no, it's here, okay. Now it may happen also that the price can make an attempt to resume the down movement, and sometimes if this is the case, the bottom which will be formed, if it has the appropriate pattern, it will give us a possibility to exit the trade before any other exit techniques trigger. So I appreciate you're doing a lot of these sessions, but I'm thinking it's difficult to see. How do you make money on the market as you are first trading during all these hours. Obviously, you are putting a lot of effort into these sessions on your own. Oh, no, HK. We make these 3 sessions once every 2 months, so only during 2 sessions. Myself, I trade only 2 or 3 days per week. Only 2 or 3 days per week, okay? Usually, I don't trade the Monday, except if there is some events in the market which can move the market. For example, if there has been an important news during the weekend which can move some currency, then I am in front of my screen the Monday. And it's rare I trade the Friday. I typically trade the Friday when we have the non-farm payroll, so once a month. Otherwise, I trade 2 or 3 days per week on average. And it's well enough to make the profits. When we make the courses are always at 4 p.m. Eastern Time. 4 p.m. Eastern Time for me is 10 p.m. my time. And so I don't trade during the second half of the US session. And so trading and teaching for me is not incompatible. And so trading 2 or 3 days per week gives me a lot of free times. And don't forget, I have also trades in the daily time frame. And so the daily time frame, I have plenty of time to check them. I check them only once a day when the market closes at 5 p.m. Eastern Time, which is 11 p.m. my time. Okay, now we have here on the USDN pair the setup bar, possibly the setup bar for the movement invalidation. But we have to wait for the close of this candle in around a few seconds. It is good to see how the movement invalidation is made. Okay, the candle, now I can say it's a setup bar for the movement invalidation, and my XXX will be here at on this level here. If the price hit this level, I will make my XXX. Okay, the price has hit my exit level, and so my XXX has been made. I would have pushed the button with my MTM Max Trade Manager on this level, making the second unit, as you can see here, a small loss. So let's say 2 pips plus the spread, 5 pips loss. So XXX 1 minus 5. Now, what we are doing for the moment in the max, and this will become soon another exit rule. You can see in this example, we have had a long bar, but against the trade, a long bar. When we have such a long bar against the trade, which becomes possibly an exit setup bar, or one of the following bar becoming an exit setup bar, we are forced to leave many pips on the table. And so what we are trying to do is to improve that rule in order to make our exit way earlier before the long bar forces us to close with some losses. Okay? Somewhere in this area. For the moment, the rule is not yet completely defined, but somewhere in this area. In such a way that we still have some possibility to catch a small profit on the second open unit. But this rule will become official when it will be completely defined. Anyway, here, a small loss on the second unit, making the trade virtually break-even trade. 3 pips profit, I consider it is a break-even trade. So trade 1 plus 3 pips. The stop loss was 22 pips, so this represents a reward to risk ratio of still positive, but virtually 0. So I take 3 and I divide by 22 and 2, and so 0.07. 0.07 R. Okay? can see that a pair which is not usually a pair moving a lot very often, when we are extremely attentive to all the details the price is doing, focusing mainly on the risk aspect, we are still able to close the trade in a honorable way, I would like to say. Okay? Well, do you have questions about what you have seen today? So I think it's a good time to wrap up here. The European market are closing, so for me usually it's a good time to stop trading. Do you have the Max Trader add-on MT4 also for other platform? Which platform? If not, I surprise you. You do not use it as you do not really like MT4, right? Okay. Concerning first of all the indicators and the template of the Max. Of course, during our training session, we provide all of them for MetaTrader. We also provide them for other platforms like TradeStation, like NinjaTrader, like Multicharts, and we cannot provide them for all the possible existing platforms. Okay. If you want to develop them for another platform, we can give you the source code. Now, many of our indicators are standard indicators, for example, moving averages or the stochastic RSI or the MACD. So they are really standard with some tweaks, but the tweaks are not difficult to implement. Now, concerning the MTM, the EA, the expert advisor, which is our Max Trade manager, is specific to the MetaTrader platform. And so, unfortunately, for the moment, we don't provide them for the other platforms because it's really a technical problem, and you may have possibly the equivalent on other platforms. I know that one of the platforms I'm using is the old Java platform of Oanda, and Oanda gives me the information I need to follow the evolution of my risk on the trade. Whenever I make a scale in, whenever I make a scale out, so the old Java platform gives me that information. Now with TradeStation and with NinjaTrader, I have no idea. But I know that someday in the future, chances are high that I will switch to one of these platforms. I like NinjaTrader, but I'm waiting for the version 8 because it will be a multi-thread platform which will be great with Windows 7, 8, and further 10 when the version 10 will be stable enough and practical enough. Okay? No other questions? Is there a price drawing this time? No, not this time, HK. It was only during the sales presentation, so. Okay, no, I see no question. And I thank you for your kind words. Okay. Now, if you have any questions, about the Max, you can always contact us. You have our email address, you have our Skype address. Chris or Craig will gladly answer any of your questions, and so feel free. And so don't forget, we have a second session for the London Open Thursday, so in 2 days. So Thursday for the London Open, which is at 3 a.m. Eastern Time. 3 a.m. Eastern Time. Okay? So I hope you have enjoyed this presentation. You have an idea now how the Max is working. And what I would like to do next week is, let's make another fun experiment. I will let you choose the pairs to consider. Okay? And we will follow these pairs. It may be fun also. Okay? Fine. So I thank you very much for your participation today. It has been fun for me too. I wish you a great day, and so see you. Bye everyone.